All right, what's going on, everybody? This is Paul McMillan II. Welcome to another back testing session on NAS100. Now, I just actually won this trade and caught this big buy. Look at this huge imbalance move that NAS100 did. So I'm going to show you exactly how I got here and how I prepared for this trade. All right, so let's go ahead and get started. So the first thing I'm going to do is actually make sure my auto save is off. I'm going to start with the replay because I actually kind of marked up my charts all the way up until this point. Then I basically just waited for price to play out and see if it was going to break any one of these horizontal lines. And then I jumped in. Ultimately, it broke above this horizontal line and bought up. And it looks like it's still buying up. So let's activate the replay tool here. Then I want to show you exactly how I got to this process. So what I'm going to do is I'm going to actually make sure auto save is off. And I'm actually just going to clear my whole chart. All right. And turn all my indicators off. So typically when I'm marking up my charts, first thing I do is mark up market structure from the 15-minute to the 4-hour time frame. So let me go ahead and do that. So this is as far as price went. So I end up putting my vertical line here. Oh, that's not as far. Okay. Let me go back even further. See, is this as far as it's going to go? I think this might be it. Yeah, no. Let me pause this recording until I get to this point. Be right back. All right, so here we are, right at the beginning here. So then we're going to go ahead and start marking up our market structure based off the imbalance candles, balance moves. So that's what we're going to do. I want to make this yellow. All right. This was a very, very good floor to type in here. And ultimately we see it up here as well. Probably say maybe here. Then another one ultimately up here. You see price trended up to this point as well. And busted maybe up to here. All right. So then I'm going to actually start drawing my zones based off of these here. So see, the next one I see is right here. Yeah, that's good. Next one here. Definitely right here. And up in here. So then what I'm going to do is pause this recording and change the coordinates of these zones. Be right back. All right, so now we got that done. Let's move on to the 30-minute. We're going to do the same exact thing on the 30-minute. Horizontal line here. Horizontal line right here. Definitely a good one here. You know, actually, I'm gonna put one here that's even more appropriate. Yeah, we'll do that. And then ultimately, I have one here. Right here, definitely. One at the top here. So we're going to make this light clear and green. And then there'll be one here. All right. So basically what I'm doing is I'm basically just marking up the market structure. Now I'm going to change the coordinates of these and move on to the 1 hour. Be right back. All right, so we did the 30-minute, so we're going to go on to the 1 hour. So now we're going to mark up the 1 hour. So let me get my vertical line started right here. And so now I'm going to make this red. Put this all the way to the top here. So now I'm going to mark these up. I'm going to make these red. So I'm going to change the coordinates of these and we'll move to the 4 hour and then we'll get to the 15-minute. Be right back. All right, so now that these are marked up, let's go to the 4 hour. It looks like the 4 hour is marked up. So this is current price, so that's good. So now we're going to go to the 15-minute. Let me actually pause this recording real quick. I got to do something real quick, then we'll get back to business. Be right back. Okay, now I'm back. Okay, so we basically went through step one. We marked up market structure and supply demand zones from the 15-minute to the 4 hour time frame. So now we have a good idea of exactly what price are doing with these zones clearly. So now the very next step that I do is basically I like to locate order blocks using an order block indicator. And then ultimately finding out what, well, the first thing I do, I'm sorry. The second step is that I actually figure out what trend the market is going. Is price trending up? Is it trending down? Or is it a ranging or consolidating market? All of this here, this is a ranging market. The market is consolidating. So then the next question that I have is, and this is what I do. So I go to my higher high, lower low strategy. And so I try to figure out exactly what recent high and what recent low the price that price actually is producing, or what high and low just popped up. So we can see that this is the most recent high, the most recent low. So what I do is I take my horizontal lines, I take two of them, and I actually place them on their most recent low and high. And I have them labeled to where this is going to be a supply to where there are supply and demand zone. And here's the reason why I do that. Because when you're in a ranging market, you don't want to trade it. You want to wait to see a breakout, an official breakout. And then that's how you actually get the best trade. So that's what you want to do. So I put these on, and then basically I turn this indicator back off. And so then once I do that, then ultimately I'm waiting for a break and retest out of one of these areas, either down to here or price break and retest out to here. That's going to determine whether I'm going to buy and sell. Then once I have determined that, then I didn't mean to save this. Shoot. Let me pause this recording. Let me do something real quick. Okay, I'm back. So I made a little bit of mistake, but I can fix it. So then the very next thing I do is I locate the imbalances and order blocks by using my order block indicator. And the reason why I do that is because this is going to help me to figure out where more likely price is going to head if it breaks any of these horizontal lines and break and retest. So then once I locate the imbalances in the order blocks, then I kind of put horizontal lines in areas where the order blocks were formed. Okay, I mean where the imbalances were formed. So I'm actually going to make this just blue. So there was an imbalance here, which was probably produced from this imbalance candle. There was an imbalance here, and there's an imbalances down here as well. I also missed another one. Imbalance here, imbalance here. So then I know that one way or another, these imbalances are going to have to be filled. The question is, which way are the banks going to push price to fill one of these orders? Which direction? So are they going to push price up to fill this order and ultimately buy price up to create an all-time high and then drop price all the way down to fill these orders? Or are they going to actually just decide to drop price down and fill this imbalance area, which is pretty much from here to here, and then ultimately bring price back, buy it up and fill this imbalance, and then create an all-time high and then drop it to fill these imbalances? That's the million-dollar question. So we have an idea of where they want to drive price. It's just a question of which imbalances do they want to fill first before filling the other ones. All right. So then once I have located that, then basically what I do is I take my risk to reward tool, and basically I line them up with the horizontal line. So if price going to buy up, then I'm looking for my first take profit to be here in this imbalance candle, because more likely they're going to fill all this imbalance, which could go down to here or this wick. So this is probably going to be my first take profit. This is probably going to be my second one if price decides to buy. All right. And then I will put my stop loss here. Then I would take another risk to reward tool and then basically place it to where if it buys up, then I'm going to prepare for it to buy up. All right. And so then, even though this is the first imbalance, more likely if they get to this imbalance first, they're going to buy price all the way up for a new all-time high. So I could just probably realistically even put my first take profit here, or maybe a second take profit there, and put the first one even down here. And then stop loss would be down here. And that's how I would actually play it out, because that way, whichever way that the banks go, according to these imbalances, that's where we're going to go. Because ultimately, you want to make sure that you are trading when the banks trade. You don't want to trade against them. So if you know that there are imbalances in the market, you want to mark those up. And then you want to figure out which imbalance that the banks are going to probably want to fill next before getting to the next imbalances that you see on this chart. That's why understanding institutional is very important. So then the last thing I do is I already got my stop loss and take profits planned. So then what I do is I basically use a Delorean EMA indicator. All right. Let me bring this down a little bit more. I use a Delorean EMA indicator to actually determine when I'm going to actually jump in for a trade. So perfect example. So like when you look here where we have everything set, I need to just zoom out a little bit more. Give me a second here. Yeah, this might be good enough. You guys might be able to see the chart then. So we have both of them set. So then with this EMA, we basically market execute when the yellow EMA crosses the red EMA. That's how we do it. Now, there was already a cross here, which would have been a good sell, but we need confirmation. We need a candle to close below this or close above here in order to actually confirm with the yellow and red EMA cross. Then that's when we actually jump in on either of these. So then this is what I basically did. I basically just waited for price to make its move and just sat on my hands and waited because there was a lot of consolidation here and a lot of liquidity. So ultimately, I did draw a trend line here just in case, because at first I thought price was going to start selling. So I drew a trend line here. So then let's see how price goes. I'm just going to kind of go with you on what price did and then what I ultimately did and then how I ultimately bought up. So price started pushing up. And so I saw a lot of wick action here. So I said, you know, price probably might buy up, but there's still a little bit of resistance here. So we'll wait and see if it closes above. Actually, ultimately, I actually take that back. I actually pulled this supply and demand zone probably close to down here. If I turn on the risk to reward, that's what I forgot. I actually made a mistake and did that. So it was actually kind of matching up with this lower high here. So I actually put it here. So really in reality, my entry is right here for this one. So that's the one adjustment I need to make. So let me turn this off. So let me save my progress. So ultimately, I saw that price kind of broke this trend line. It busted up, but it didn't really close above. So I said, okay, you know what? It's a possibility that price might buy up, but we'll see. So I'm just going to draw two trend lines and see what happens. So then I waited. Price kept on pushing down, trying to, you know, fill in this imbalance. This is the imbalance candle. So they try to level that out by filling that. Then price looked like it was pushing down, but then it bounced up again and started buying up. So I saw another wick action. So I said it's really respecting this trend line and really this area of liquidity. So I waited. So then price looked like they were trying to fill this imbalance candle that this formed. So really it was a lot of consolidation. But then when I kind of saw that this candle closed above, I said maybe it might be pumping up some buy volume. And then ultimately price did push up. And I almost bought in this area, but I didn't because I didn't see a candle close above this. So price did push up, but then it retraced back into a red candle. So I said maybe that's proof that price is ready to explode and buy up, but we'll see. So then price looked like it was pushing down, but then it bought up again. So I said maybe this is some buy up. Then they filled that imbalance candle because this was an imbalance and they filled that. And then ultimately, price bought up. And so this candle closed down, they corrected this imbalance, and all of a sudden prices started springing up. And so once the price pushed up to here, I kind of got in late. Then I kind of just actually went into this candle and then just bought it all the way up to here. Well, ideally, I think I closed out my first partial trade. I believe was either up here, maybe close to, no, I closed my first partial trade, I think around right here. and then close my second one right up here. But price ended up going all the way to the top here. And now price is trying to correct this imbalance, at least 50% of it, and then looks like it's buying up again. So that was proof right there that we actually won this trade and it bought up. So we just went on ahead in that direction. Let me go back. I wonder if they're going to play to where you can see how price bumped up. Yeah, so there we go. So you can see that here. So you can see here, they corrected this imbalance, and then they said, okay, this imbalance here, we're going to go ahead and get that, and we're going to get this imbalance as well. And then we're just going to buy price to create an all-time high. And then once we correct everything, eventually we're going to come down and get these imbalances here. And that's why price ultimately shot up. And you can see it bumped up more. And then now it's doing that. And then, of course, you see current price now. So that's how we won this trade. So I'm going to show you proof that I won it real quick, and then we're going to end this back testing session. Give me a second here. All right, so now you see it. See how I cut all this win? And that was, let's see, 48 times 2. So that was about like a $96 profit, kind of close to that. So that's proof right there that we actually won this trade. So we actually did decent. So that's it for this back testing session. I'll see you in the next one. Take care. Bye.